Hi, my name is Felix Fry.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. OptionsGeek LLC is not a broker-dealer. OptionsGeek LLC, Felix Fry, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey there, everybody. How's it going? Thanks for joining in. I'm still waiting for Felix. He's going to be hopping on in a couple of minutes. But before that, I just want to take this opportunity and thank you all for being with us, following along, commenting, liking, subscribing. Make sure you leave a comment throughout. Just say hi so we know you're there. Also, one thing we want you to do this time is comment some stock names you see on the UA board today. And we will definitely want to address those and talk more about them because, we find a lot of these on our own. And we try to prepare and do our best to actually prep for the show. But, we also want to have you here help us out, have your input in there as well. So that would be really, really cool if you guys could show us around a little bit. So there's some agenda today. So before Felix hops on, I'm going to tell you a few things we're going to be talking about. And some of those are, let me just pull them up here. All right. So we're going to be talking some AMD. We're going to be talking about, Plug. Mara, Riot, but also that DDD that went up a lot. Let me just show you guys what I mean. And here it is. All right, just let me share my screen. What a hot market. Yes, it's a hot market, very hot. All right, here's Felix. Here's hopping on.
Sorry, guys.
Hey, Felix.
How you doing? Good?
Good. Yeah, I was just telling everybody to, let us know what they want to see, what they're seeing on the UA board, what they want us to go through. And
ask questions.
Okay, we got some names, but yeah, and ask some questions. But what were you thinking about starting off with?
So what I really want to talk about is, yesterday after the show, obviously the crowd, the Trump crowd, took over the Capitol, and people actually died, and it was a big deal. I mean, you see pictures, and it's incredible that that's the United States Capitol. So I think yesterday I spoke a little bit about my thoughts about what's happening in the world and following the money. And if I thought 1% yesterday that there was this talk of people potentially leaving, the billionaires figuring out a way to get the hell out, I'm probably at 2% after seeing that today. And I think that it's important for people to realize that there's a lot of angry people. There's millions of angry people throughout the world, and now you see it in the United States. And there's one stat I just looked it up was from 2015 to 2020, there was 87 million guns sold in the United States. So so in New York City, the New York City police has 30,000 officers. There's 1 million people outside of New York City, 8 million people around New York City that, that are not as wealthy as some of the wealthiest people in Manhattan. And, Manhattan's a small island. And, when you've already got a couple of months of crowds demanding and understanding, what they want and going after it by looting and doing bad things. And unfortunately, it's a learned process. And once a mob recognizes that they have some power and they have guns, how does 36,000 cops protect themselves against a million person march into the city? If you were a billionaire, Marco, if I was a billionaire, first of all, I wouldn't be on this podcast. If I was a billionaire and you were a billionaire, you have to be thinking, is it safe to be in New York City? Is it safe to be in San Francisco? Is it safe to be anywhere?
In the U.S.
In the U.S., just in general, it used to be, and New York City was great for that. You could be a billionaire and be walking down the block and nobody would know, and it would be great. But, I think, it was only 2 months ago that I saw, a march towards Bill Ackman's house in the Hamptons, because the wealthy are in New York. They go to their $100 million home in the Hamptons and they're safe. They're by the beach. And all of a sudden, the mob goes to them. that's got to be scary. That's got to be scary to wealthy people. And so, like I said, there's got to be some Zoom going on like this, where there's 400 of the biggest billionaires going, where do we go? Like, what's the place? Somebody says, let's buy New Zealand. Okay, that's where we're going. Let's go. And maybe this is the last hurrah, right? We got to get our money out, and Bitcoin is going to do that, and we can just take. Who knows? Who knows how it's all working? But if I was 1% yesterday, I'm 2% today, and I'm still hoping and praying that the U.S. government gets going with. I think it starts with policy. Again, that same, financial engineering that they allow. They allow people companies to borrow money, buy their stock, and it inflates. And then the CEOs and the corporate, the C-board, they all get paid. And I think people are getting pissed off. I think people are getting smart, and that's what causes revolutions. That's what causes people to actually revolt and to say this is not right, especially when you got millions of people on the food line. So that's my 2 cents on the Trump protesting thing. Then it's obviously not good. It doesn't seem good, but the market is cheering a new presidency with a new Senate and a new Congress. And what do you get? You get one day after that, you get a plug. PLUG gets an investment from SK, 1.5 billion. These stocks are soaring now. It's not coincidence. If there's one thing, if you know me, then you know that there is no coincidence, or very little coincidence. So the SK Group waits to see the results and says, you know what, we're in. And the Biden administration is going to put in $2 trillion behind clean energy. Maybe that's his legacy. That's his legacy. He's kind of stated he's hoping to be there 8 years. He says, after 8 years, I want people to remember Biden, the Biden family, not for any scandals, but for changing the United States from oil dependent to the biggest clean energy leaders in the world. And there you go. You get SK coming in. All its allies will benefit. So the SK, maybe just the beginning. These stocks, if there's this much money to go, it's going to trickle down all the way to the bottom. So there's a lot of infrastructure to be done with clean energy, and then you have the infrastructure bill that, again, it's just all industries start benefiting from a lot of money being poured in. They also want to give money to the average investor or the average person, so that they can actually feed their family. So they give them $2,000, although I don't believe it goes that far. So they probably have to give 10, and maybe that's the answer in 3-4 months when the M1 money flow is, which basically makes a debt society go. It's the money that's going around, needs to be bigger and bigger, and they want to give people money so they spend it so that the companies don't collapse. And all of this is in play. The market's going up. And this is when I get a little bit nervous. This is when I see these types of moves, it makes me nervous. And which brings me to the SPY trade that we did the other day.
Right.
Sure, we got to move. So people have been asking me, what do we think now? What do I do with these things? Listen, you're asking me, I'm not a wizard. I have no idea where the market goes. What I saw when I did the SPY trade was an opportunity to hedge the book with great risk reward. We did that. If for most people, it should have been 100%, which means you should have got out of one. When you get out of one, you leave the other two. You treat it. It's a shorter term option. So I designed a shorter term option for the portfolio to protect a portfolio that has longer time frames. It's called duration. So when you structure a portfolio with options, you have to look at how many calls I have, what's the expiration of these calls, because trade one that has a 4-month call option, okay, is not the same as trade two that has a 1-month call option. So you have to sort of figure out what's the duration of options, because the longer the duration, okay, let's say it this way. I can match, say I have 4 calls that are 4 months. I can match 4 calls that are 4 months with 1 put that's 3 weeks. Okay. So I don't need to have 4 puts against 4 calls. I can have 1 put, which is 3 weeks, against the 4 calls. And so I'm actively, behind the scenes, I'm actively thinking about the type of put I'm buying and looking at. I'm also trying to pick the right risk reward time. So right now I would say, okay, if you got out of a third, you're in that spot, you get out of a third, or you took some profits, and now the market's moved higher. You either have a trailing stop at flat, or you waited till negative 50, or you're getting out a little bit, however you're doing it, however your plan is. But that put, okay, that one put saved us on that day. And if you took that 100%, then that put now is back to, maybe it's even flat for the whole position. The 1/3 worked. So now you're taking that put, okay, and it's done. It's out. So now, again, you're back to long calls. Now the calls should be working, which many of them are. And now I'm thinking, you got to believe I'm waking up thinking, where's my call option? Where's my put option that I'm looking at? I need a put option, and I'm going to, if you still have that put, I'm going to say, roll it up. So there's a lot of people that come in with questions to me on email, asking me, what do I think now? Where do I think the market's going now? The answer is always, I don't know where the market is going, but I am concerned about the risk reward of the portfolio here. And I would like to actually, I'm actively looking for puts. I'm actively looking for a situation where I can say, okay, you know what? I want to buy this put. And if I lose on the put, great, because then the market's going to scream higher. But I am concerned that you wake up and the market's down. What if they take the White House tomorrow? You know what I mean? That's not going to be good. And so these are things that's important. So,
but what I wanted to ask you there, when you mentioned it, how do you determine that ratio of hedge between, we said 4 calls for 4 months and then one put of 3 weeks?
Great question. So it does take a little bit of experience. I don't think there's an exact formula. I haven't thought about what the exact formula is, but in general, if I have 4 positions, the reason I say 4, because if I have 4 positions and the market starts trading down, and if I lose 50% stops on those 4 positions, I'm going to lose, call it 50 cents 4 times, that's $2, and if the market is trading down on a 3-week option, I'm at least going to make 100 on a sharp move. I'm going to make 100% moving towards the 200%. So I am 100% is $1 on a dollar position. So I would make $1 trying to make that 2. So I'm trying to get back that the 4 positions that I have going long, I'm going to lose 50 cents. And I got to actually be actively trying to get out of those things on my stops while my put's working. And so that's how I think about it. It's sort of like a 4-to-1 ratio. Maybe 3-to-1 is good as well. But 3-week option is going to be fast, furious. If you get it right, it's going to explode. The 4-month option, you hold it, it's $3. Okay, it goes from 3 to 2.25, 220. That's about 25-30%.
So right.
Go ahead.
So then, if you have, for example, 8 calls and you want to hedge one put, you're gonna increase the size of that one.
You might want to increase the size of that one put. Okay. But I'm also, to go deeper into that, I'm also thinking, you have, I have a gold call. Well, if the market starts tanking, that gold call shouldn't do that bad. So that's like sort of, I try to weight them, and I show people how to weight it, where it's like, maybe that's like a 0.5. That's like a, let's take one side. NEO, market tanks. NEO might be a 2. Gold might be a 0.5. And so you can sort of try to weight them with a beta, if you will, and then weight it and then see, okay, I have, after you add it all up, I have 6 chips long. Now I need 6 chips short. How do I find something? Well, if the average duration on the calls are 3 months, and I use 1 3-month put, that's not going to save me if the market tanks, because I'm matching duration, 3-month versus 3-month put. It's like, so I need a 2-3 week put, and then I know, okay, people will just do 1 position that could save them here. There's 8 long calls, but this one is a gold call that should go up. This one is a defense name that should probably hold steady. This one is such a cheap stock that it's not going to go down that much. And this is, that's how you got to look at it. So I'm actively doing that, even though people may not realize it. I'm actively trying to save everybody's behind when something happens dramatically and they say, oh, at least the portfolio was hanging in there and my put exploded. I was able to get out 1, and then that allowed me I got stopped on these 2. So making 100% on a third of 1 helps on the stop of 1 or 2. So these are things, again, that it takes a little bit of time, but if you've been doing this long enough, then you start seeing the and understanding that duration matters. Duration definitely matters. So I think so. I would say I don't know where, you tell me where something's going. I get the question all the time. Marijuana stocks, where is it going now? I don't know. Our job is to find good good situations with great risk reward. We talked about what risk reward was yesterday.
Mm-hmm.
And when we see that and we match things up together, then, we're trying to find those hotspots. We're trying. What I tell people as well is that when the stocks are going up and you start asking yourself those questions, what's the next move? Where's it going? Is it going to come back down? It's going to go back up. You've now went from what we're doing, a process. You've jumped ship to now becoming this day trader type person. You're trying to pick the up or down. Well, the honest truth is that the best guys in the world are probably somewhere between 53 and 54% right or wrong on the direction on a daily basis. Okay. Or we're picking a stock 53, 54%. That's as good as flipping a coin. So your guess is as good as my guess, essentially. Our guess is as good as the biggest hedge funds in the world's guess. What's different is the risk reward, right? That's what we're trying to focus more on. And if the stocks are moving up and you ask me, where's it going? I have no idea. My question is, how much are you up on the position? And if you say more than 100%, I'm going to say, did you take some off? Why aren't you taking some off? You might have a very good reason, and your plan might be, I don't want that reason, but you have to actually say to yourself, I have a plan. I don't take off at 100, and I do take off, at 150, 200 or whatever. Now, many people talk about the 100%. I'll let you, maybe let's talk about that later. Let's get into this. But how about this? You asked that question about the magic of the 100% a little bit later.
Okay.
Is that fair? Okay. Yeah. So we could talk about plug and we could talk about some of the other things we're seeing. Obviously, Bitcoin is going up again, huh? Bitcoin is.
Talk about some FOMO I have, like it's Bitcoin all over it.
I think everybody does, right? I think it's
you
one
just
of these
can't
things.
believe it's gonna keep going so much higher. Like
it's an incredible psychology game there. But let's you have my screen here?
Yep, I have it.
Okay, so we'll just jump in here just to see a couple of different things. Obviously Tesla's a beast. I mean, there's nothing to say about Tesla except that it goes up 5% every other day. So it's up 5% today. There are positioning going around. It's $800 stock. I don't play around with these because most people can't spend $20, $30, $40 per option, which would be $2,000, $3,000, $4,000 per option. So that's why I don't necessarily look at these big cap names where the stocks are above even $100. It starts getting very difficult. But I would say that AMD has been, over the last 2 weeks, hot. The stock is trading well today. That 91 level that we saw and we pointed out over the last 2 weeks, 90 level is a big level. Seems to hit that level, go up. There's CES. So the CES, the Consumer Electronics Show, January 11th.
Yep.
The keynote speaker is the CEO of AMD. Usually in these shows, when in the beginning of the year, CES is a big show, they usually try to come out with a big story or something. It's like the lead part of, if the show was 2021 and we're going to see it, this is the intro. This is why AMD is going to be great. And but other than that, I mean, I'm looking at earnings. They're buying February options, the February 100s again. They look pretty good this time. But they were about $3 yesterday. Today they're $5. But stock looked awful yesterday. Okay, and that's how these things were, right? Stock looked god awful. It was 2 days in a row, went from 95 down to 89, and now it's trading back down to 95. So remember, there's a lot of people that got in during the middle of December in calls. Najarian had a call out in CNBC, and there was a lot of people just jumped on the calls. We waited. We thought, like this it seemed like there were sellers disguised as buyers, and that was well, but stock is starting to do well again. So it looks like maybe it ran out of gas, people give up, and they surely had a tough time holding on yesterday. And now today it's up $5. But I don't know, to be honest, I don't know why it's up so much today.
Right. I mean, 2 days ago, there was news announced that market share of CPUs, computer CPUs that people use between Intel and AMD. AMD actually took over. I'm going to just show it
that's
on my screen. And here it is. Here's the chart. So since 2006, Intel has been leading by a landslide.
Wow, that's a cool chart. That's a cool chart.
They've been killing them. And just a couple of days ago, it looks like they got
that's pretty cool.
8% quarter one. I mean, incredible what AMD has done and
Yeah, that's a
it's
cool
a long
chart.
way to go, in my
I
opinion.
like that. Yeah, I like that chart. That's a good chart. That's a good chart. So AMD, obviously, a big story, and people love this stock. The only question is the valuation. But
Mhm.
they have earnings. No doubt, it probably is a good earnings report. I mean, it's just they're firing on all cylinders. People buying the February calls. They bought they bought these in the morning. It looks like somebody jumped on these, the 92 and a halves.
Mhm.
Look at that, right in the morning, 92 and a halves. What did they pay for that? Look at that.
Wow.
Seven. Actually, this was on, let's see this. This was 944 on
Just
the
had a sale.
offer. Okay. So it looks like it was a buy. It looks like it was a buy. And the reason I say that was because you see at 944
Mhm.
and
Yep.
944, they paid 696. They took the offer. Most of it was on the offer. And then a minute and a half later, they paid $7, and that was the bid. It looks like it was a big order that came in that was buying. They paid not 696. They then bid 7, and 7 didn't trade, and maybe somebody put them up. So maybe, so if it was, for example, I'm Bank of America, customer comes in, they wants to buy 6,000 options. I say, okay, I'll stop you at $7, right? The market's offered at 694, 690, and
Mhm.
we'll take whatever we can up to $7, and then that's where you're stopped. So you have no risk beyond that. And they say, fine, we'll pay up to $7. Somebody pays 696. Me, I take the order. I go out, I buy 2,500, 2,528 at 696. I try to buy as many as I can at 7. Okay, I'm bidding 7. There's nobody there bidding 7, and I tell them, the broker, sell what I have to, or the machine, sell what I have to. So then I actually traded at 7. It looks like I hit the bid, but it really was an actual buyer coming in. So that's where sometimes you see this
Huh.
gray part. That's why
Right.
it gets. I don't want someone to just say, "Oh, it was 100% on a bid." That means it was a sale. There's a bigger
What I
picture.
assumed first, and right.
Right. There's a bigger picture. The vol that they paid was you could see was higher than yesterday, 55 and a half right here. And yesterday's vol was, it looks like it was under 54.9, 55. Okay. So they paid a little bit higher on the vol, and they first paid 696 on the offer. Then at 946, it climbed, and they were bidding 7, and it looks like the bid was hit. But that might be the bank, me, putting the person up on the trade. So that's why it looks like the bid. It looks like it might be a sale, but it's not. It's the customer was buying. I actually, as Bank of America, may have sold it to him to put him up on the trade, because that's what we agreed upon. Does that make sense?
Yep. Yep.
So that's sort of how sometimes that can get a little confusing. But it looks like they're buying some calls here. They're getting excited about it. The 100s are $5. Earnings are on the 26th. So earnings calls for January 29th, earnings calls are 350. Yesterday they were probably 250, 2.25. I like it. I mean, I like AMD as a stock. I like the stock. Obviously, this looks a little bit, if you look here, just if it turns here, it's a head and shoulders, like one high top down. But I suspect that this wants to try to reach and break the 100 mark. If the market holds, it might want to break the 100 mark. I also will tell you that, let's just look at here. Hang on. Just look at chips, just in general, the chips. Like Micron has been bullish. We talked yesterday about call buying in Micron. Look at the other big Taiwan semi, monster move. This is that curvature going up is, parabolic, right? Trying to think, it's thinking parabolic. So I think you want to, let me put my inspect on, right? And make my size here. We're looking at a trade that looks like it might be parabolic, or it's trying to be parabolic. It's doing this thing.
Right.
So it's not something that you want to short. If tomorrow it gaps down to 115, the shorts, you better believe the shorts are going to start pushing on that. Okay. So this would be called, very rarely does it happen. It's called not an island top. This is called the evening star. An evening star. If it gaps up, and then tomorrow it gaps down, and there's a gap between here and here, and a gap between here and here, that would be an evening star. This right here was an evening star. It should have been lower. Like people probably were pressing it, but the fact that it came up the next day and sort of held, then the shorts probably give up there pretty quickly. Evening star. This is morning star. I guess the morning star. So gap down, gap up. You see, and people are then buying against this. So these things, they don't happen often. I think it happens more with these type of stocks because it's an Asian stock. But usually, let's just look at Micron. You know, evening star, morning stars. You should take a look at those. It's gap up, gap down. This would be this is called an island top.
Mm-hmm.
So you see it's not just one. Evening star, morning star is one day. This is 4 days being up there, and it's gap 4 days, and then it's almost a island. It should be a gap from the high to the low.
Right?
Yeah. So exactly. So look, these are just technical stuff that people should sort of look at and pay attention. But it looks like it's having a little bit of trouble. If I look at Micron, what am I looking at here? I'm just looking at, see the wicks. The wicks are a little bit higher from the top. That means it reaches the top and then it goes lower. It reaches the top, closes lower, reaches the top, closes. So this is having a little bit of trouble here in Micron. So, if we do turn, you could see Micron trade back towards, this is the level right here. You want to make sure 68, 69. So it'd be a little bit concerning here by just not seeing, when there's a bull market, you see how look how this is going up. Close at the top, close at the top, close at the top. This one, close at the top. This one, no, but then it closed near the top. Okay, so when it starts seeing these wicks, it's basically selling. There's sellers somewhere around 76 to 80. People are getting out. Maybe it's the people that bought it down here. Is that fair?
Yeah.
Okay, but all the semis look great. And again, infrastructure bills, when you build anything, okay, in this day and age, there's computers attached to everything we build, it seems, right? So, you build you have an elevator. It's no longer an elevator with a pulley system. You got an elevator, and inside the elevator, there's TVs, there's scanners. Now there's going to be new scanners for, COVID stuff. So, there's a lot of chips that go into anything that's built. You build a building, you know how many chips you got to buy to build it to fit inside the building? It's massive amounts. So that's why the semis are probably also doing well, because infrastructure bills and trillions of dollars ultimately trickle down to the guts and bones of how the building functions or works. So AMD chips, probably bullish. And I can tell you from trading the semis back in the day, when the semis get going, if they ever get going, they go like they're like nonstop. I mean, it's widgets, right? So it's just like we're selling billions of widgets, and it's like, and then the exponential, people started thinking that growth is going to be exponential into the future. But that's that. But semis, when they catch fire, man, they catch fire. What's another? Let's go back to the board. All right, so we got the Bitcoin. There's nothing changing.
Okay.
These are just like Riot, Mara. I mean, these is just we had Riot. What did we say? 28 on Riot. That's what the guy's looking for. It's 20. Yes. I mean, it sounds crazy, but this is how when they're looking to buy these options, this is what they're doing. So Riot, Mara, we got marijuana stocks.
We were looking at Riot when it was 11. I mean,
yes, I know it's like a few days ago. It might have been 72 hours of trading. Triple D. This one was, this one popped up in UOA about a week ago, and it's up today. This is a name has been shorted. Let's talk about DDD for a second. They do 3D printing, so cool name to match. But the story is basically there's shorts in this name. There's probably good shorts. I don't know the exact number, but I would bet that there's decent amount of shorts there. But this used to be a hot stock. Okay, so here we go. This used to be a hot stock. Let's just go back. I just want to see. I just look like going back historically to see how high it went, what it did. Okay, so we're using log normal. Let's use log scale just for this, just to see the visual. Okay, so what do we see there? Front and center. Left side of the mountain, right side of the mountain, okay? I'm going to say it again. 90% of these stocks that are all trading today that are doing these big momentum, this is momentum right here. If you can graph this, I can't graph it, but this is momentum on the left side of the, call it the mountain, left side of the mountain, right side of the mountain. You see these big moves from here to here? These are where the stock tries to recapture. It's trying to recapture, like capture the flag. It's trying to go back and capture that flag at the top of the mountain. If it can do that, then this wasn't the top of the mountain, and it could actually go probably double this, right? So it could double that move. It can get to 200, but it's desperately not trying to fall. But the shorts, like I told you the last time, anytime you get this break and it's sharp from the top, that's when the shorts up. The shorts don't like coming here because why? Because they know this is going to happen. Okay, but when they see that part of the mountain, that's when they start attacking. So now it took 4 or 5 years, and shorts have been in this for a while. And today they came out with good numbers, and the stock is up, partially probably because of shorts in this. But I don't know. I don't know if this is the new beginning. It happened to stop right at this high of 21 to 23, which is where these highs were, and we're here today, 21. That's all I know about the story, and I know that people are buying calls, and the volatility is 200, and that by itself is very difficult. You should keep your eyes open. It's very difficult to trade something like that. 200, they're really in the Januaries, and they're buying the 25s to 20. I mean, this is massive. This is massive movement. You're talking about 5 more trading days, 6 more trading days, and they're looking
another move like this.
They're looking for a 20-30% jump. Not saying it can. It's already up 87% on good, I guess it was good numbers, good revenue numbers. It had to be something with earnings. But one to watch, if, these things usually just don't stop like this. So what happens is you might get 3-4 days. Maybe it comes back to 17, 18, but this has now caught some people short. And, I don't think that they all come out and all the shorts get taken out in one day. But, they'll say, all right, I don't know, cuts back to 17, 16, we'll cut back a short position. But this is one that you get Wall Street Bets or 4chan behind this, and, it comes out to 18. And then you get another news, because when these things catch fire, 3D used to put out a press release literally every 3rd day. We got another customer. Boom, the stock's up 10. Oh, we got another customer. Stock's up another 10. Oh, did we tell you about this function that we actually throw paint in there? And, if you wanted to build a little model and send it to someone, over Christmas to, a comic figure, and send it to someone, and if you're in California, send it to Florida, then you can add some paint to it. But boom, stock's up another 30. I mean, that's how it was a PR news thing every day. I don't know what they're doing now. So probably in earnings, something to look at, something to keep on the board. I wouldn't chase it here. 200 vol, even 150 vol chasing. If you're going to do it, I'd wait. I'd try to hope for a pullback to like 17, 18. And if you wanted to play that, then that's fine.
Okay.
Let's see here.
We also got a comment about also 3D NNDM. Nano Dimension, I think is what it's called.
Oh God, it's another one?
Yeah, 3D? NNDM. It looks like a lot of action on on the UA, right? NNDM.
NNDM.
Yeah.
NNDM?
DM, yes.
They found something. This is the new one. This is like the new sector. It looks great. I look at the chart and I go, it's a home run.
Right.
My first response is
nice.
That's just, and again, I know nothing about it, and I'm just by looking at it, as long as the trend is there, I don't want to be short that stock. I'm looking, I don't know. Oh God, look at this thing.
4 months.
Wait, what is this? This is no NNDM. I don't know why it didn't change. Hold on. NNDM, we want daily. It looks like it's gonna blast off. Right. Honestly, it just looks like
for takeoff. That's
I don't know anything about it, but DDD is up. This is how this momentum works. DDD is up. People find this one, and then they go, hey, if you like DDD, you got to love this one. So the guys who, are, the puppet masters of these stories, they're floating around. They know the sectors, the space. So they're pushing this one now, and you don't have to push a lot to get, stock. But the stock is trading 22 million shares, and look at that. That's pretty interesting.
And so it's an Israeli company, and they're a certified U.S. Department of Defense vendor for CAG.
For the United States. So right. So the story for the defense, for U.S. Department of Defense.
Yes.
I mean, the story is brilliant, right? They have the biggest customer in the world. They're in printing. So look, I don't know anything about it. I would bet they don't have great fundamentals if you looked at it, but they might have a great story. So for all fundamentals, again, in a momentum game doesn't necessarily matter so much. It's really how good is the story? How easy can the next person tell the story? That's the formula for momentum. Have a story, make it simple, and make sure that the person who you tell the story to is able to understand that story and then able to tell the next person. and then you got yourself a winner, at least to play and at least to mess around. And
Just like Fudu.
just like Fudu, the Robin Hood of China. So yeah, so NNDM, just looking at it, nothing to say except the thing looks like, I wouldn't want to be short that. It looks like it wants to explode. Breaks, gets through 8 and starts trading around here. I don't like it anymore, but can kind of hold this level. Give me $10. I don't think it stays at 10. 10 gets me 11 quick, and this is 6 to 10.5. That's 4.5 plus call it 8, so it's about 12.5. Gets to 10, probably goes to 12.5. No idea what. No. Oh, somebody says ARC. Is that right? ARC has also been buying it. Yeah, there you go. Boom. Even better to the story. I mean, that's like that's the ultimate story, right? That's like, oh, by the way, you see 3D printing. See how that's up 100%. Take a look at this one. Really, what's that? 3D printing. How do they make money? Oh, by the way, their biggest customer is United States Defense. Wow, right. They pay billions of dollars. Oh, great. And by the way, last thing, ARC is buying it. The woman who bought Tesla and everything. Oh man, I got to get long this. This is an easy story to tell, so I suspect it's going to go up. That's just my 2 cents. Market's got to hold. Market holds. We look at that in a few days. That probably is up. But that's your momentum equation for the day.
Nice.
Good stories, simple stories. Okay, let's go to the next one.
Yeah, and these are stories we want to build with you guys. Like,
yeah, absolutely.
Keep commenting stuff. Let us know, and we can make sense of a lot of stuff because more heads are smarter than 1 or 2 heads. So
exactly. By the way, this is a good time to say that we want what my vision. When Marco approached me with this idea to help him and mentor him online, I thought, fine. What can we get out of this? Can we build a community? It's not just about me teaching you, Marco. It's about, can we build a community where we build people, we show them the process, we help people, and then they help us in return. They tell us what some of these companies. I don't know anything about a lot of things, and I do know process and options and analyzing, but everyone's going to have a little expertise about everything, whether it's a chart person or whether it's a fundamental person or whether somebody just knows the story or somebody has an article and wants to say, take this article. Here's a great article. Read this. This is the story. That helps everyone. That's going to help not just you and myself. It's going to help the community, and then the community can build. And there was a show called on Netflix. I got this idea, or it popped in my head from, of course, Twitter and everything. Everybody else does it, but I'd like to build a very neat community that is smart, understands what we're doing, and is focused and trying to help others. But I think that the show on Netflix was called "Don't F with Cats." It's actually a pretty cool documentary on how they found a group of people found a criminal. And they did a better job than the FBI and Interpol and whatnot. And it's an incredible story about the power of a community and how, more eyes are better than one, and how being a detective and having 1,000 detectives looking at something could actually get us to the answer a little bit better. So that would be very, very helpful.
Yes. Tying into that, I just want to, thank everybody again for being with us and encourage everybody to subscribe, like, and just say hi if you're here, if you're if you're watching, just drop a hi in the comments so we know you're here, we know you're watching, we know you're, and with everybody commenting different stocks, we really appreciate that as well. And as Felix said, when we combine our strengths, we can be a force to be reckoned with, especially as we get more people coming along.
Good.
And Felix, do you think it's the time for a question?
Go ahead. We can talk about that 100% because it's always a big question.
It's always a big question. It's always a big statement. You say, get out 100%. At 100% at 1/3.
Right. So, right. Because there's three reasons that I think about the way I think about it, and hopefully this makes sense because nothing, I like mentoring, I like teaching, but what I try to get down to is the logic. You're not going to remember everything I say, but if I can connect the dots and make that spark work and get that logic, hopefully it says something to you and you can go from there. So I think that the reason why 100% is a good number, one, I'm going to say that the math works for you. It becomes difficult to lose when you take out 1/3 at 100%. So if you buy three lots for $1 each, and the first lot makes $1, that's $1 positive on the first lot. That means if you lose or you get stopped out at minus 50 cents on the second 2 lots, net that position is flat. Okay, so it becomes difficult to lose. If you have a trailing stop from 100% down to flat again, so dollar goes to $2, you're out of one, and then $2 goes back to $1, and then maybe you get out of the second one, and the third one you let it go, it goes to a stop. You're still up money for that trade. Okay, and it becomes easier to handle, but you're at least acting. You're being dynamic, and you're saying, okay, I'm going to take some money off the table. One of the biggest things to remember is, to preserve capital, to make sure capital is not just all on the table, that at times where you could take it off, you take it off. You want to preserve capital. So one, it's hard to lose on a position if you take off the 100%. By the way, that doesn't mean that you're going to then capture the high, because you're averaging in. So if the option goes to 500% and you sold one at 100%, you can never reach 500%. And people say, well, what about that? Well, we're not really trying to capture the whole 500%. You could, and again, for some people, it has worked tremendously over the last year, but we're trying to capture somewhere around 200%, and we're fine. So that's the first point.
To make the math work.
To make the math work on an overall portfolio. The second point, one, it's hard to lose. Two, the core belief is that the top guys in the world, they're looking for 150 to 400% returns. They're also not riding this thing just to 400%. When it goes up, they're going to take some off, or they're thinking about taking some off. Now, they can take off some option. They can take off the risk by actually selling stock. So they might buy the option to open, but they may never sell the option. You may never see that sale come to fruition. You're saying, well, what happened to that guy? How does it? It's because he actually, as the stock went up and the calls went up in value, he was actually trading stock. Okay, you can actually trade stock to get out and extract the value. So what I do say is that if the logic behind 100%, the second reason is that we are trying to front run, if you will, the big guy, right? We're always a little bit behind the big guy. So if the big guy paid 80 cents for the call and we paid $1, and when we pay $1, we're looking for that first 100%, $1 to $2. When it gets to $2, what's the percentage for the 80-cent guy, the guy who we're following? Almost it's $1.20. Right. It's it's 150, right? So we want to beat that guy, because when he comes in, what happens? He comes in, everybody follows. Prices go up, option volatility goes up in general because there's demand. And when he comes in at $2, he might sell some of his position. He doesn't have to sell a lot, but once he sells some of his position, he's not only putting pressure. Let's just use calls. If he sells the calls, he's not just putting pressure on the stock. Okay, he's actually putting pressure on the volatility as well. So putting pressure on the calls by selling them, which puts pressure on the stock, which is hurting you. That hurts you, one. And then he's also putting pressure on the volatility because he's selling options. So that hurts you as well a little bit. So net, it's a double whammy there. And I want to beat that guy. So when it goes to 100%, I want to make sure that we're beating that guy, right? Because that guy at 150 might say, I'll take off 25% here, I'll take off half or whatever, and then I'll let the other half run. And that's how they think, right? They're always trying to preserve some capital. And they're always trying to move things around to basically take their money off the table while maintaining the bet. Okay, that would be ideal for them. And so that's the second reason we're trying to front run the big guys, because they're going to come in, and when they come in, if you haven't sold and then they sell in front of you, it's a double whammy against you. The stock goes down and the volatility is being put pressure on you. So that's the second reason. And then the last reason is more psychological. Okay, it's more psychological. You look at a stock and it starts running, and once it gets to 100%, the amount of money that's in that particular in that one trade starts becoming significant for someone. Meaning all your trades are $500, all your trades are, let's say, $1,000, and then $1,000 turns into $2,000, and then maybe it turns into $2,500. That is now supersized versus every other position, which is still maybe around 100, 800 to 1,200. And every time that moves, the $2,500 position moves, it's a much bigger portion of the portfolio, a much bigger move. And people, because it's a leverage game, people have to get comfortable. The worst thing a new person can do is start trading a lot of money in options and then, make a lot of money early and then think that they can trade, big size, much bigger size. I'll give you an example. You want to play for the New York Yankees, you got to go to the minor league system. Then you got to go, which is first it's like the summer leagues. Then if you're good there, you can go to minor league baseball. Then if you're good there, you can go to, double A, triple A, and then you got to be really good. And then you can get to the majors. The Yankees have this guy, Jason Dominguez. He's like 17 years old. He's amazing. Can he play in the majors? He can hit a 90-something mile an hour fastball, but the majors is, not just 98 mile an hour fastballs. They're throwing 98 mile an hour fastballs and they're throwing an 82 mile curve. It's different. It's the professionals, right? And so when you're the way options work is that when you make money and all of a sudden you started trading 3 lots and now you've made a lot of money and now you're trading 20 lots, you're going to experience the 99 mile an hour fastball. I don't know if you ever sat there and watched a 99 mile an hour fastball. You want to run. You think, I can't even, I don't even want to be in the plate. And so, but the major league professionals, they're right there and they're swinging at it like it's, all right, it's fast, but I've seen it. Well, most people haven't seen a 30 lot, 40 lot, 100 lot when all of a sudden $1 turns into 5, 10 grand turns to 50. And now you're like, this is awesome. But the next day the stock gets downgraded and 5 goes to 3. You just lost 20. Can you handle that 20? Right? That is a very difficult for the mind to do if you're not used to it. So the goal is for a young person in this game to continuously try to gradually go from 1 lot, 2 lots, 3 lots. Like anything else, don't just jump. Just because you made money, don't just jump right to the 50 lot table. In any game you play, you should not be doing that. So options is no different. So those are, by easing the mind, by the third is by selling 1/3, you ease the mind and you allow yourself to focus on the portfolio and not one position. Because what happens is the mind tends to focus on one position. And that one position becomes the only thing they're looking at, the only thing they want to get out of it. And for some people, your back starts hurting, your eyes are, you're too tense, and you just keep focusing. It's always good when that's happening just to reduce the position. I try to force people to do it just by taking the 100. It's the third reason. So first reason is that the math works in your favor, so you're taking capital off the table. The second is we want to front run sort of what the big boys are thinking. If he comes out before you, it's going to hurt your position significantly. Okay, maybe significantly, but it should put pressure on it. And third, it eases the mind for you to actually, you have 5, 6 positions and you want to give each of them a good look and not just focus on one that might be either winning or losing, and you can't focus on anything else.
Okay. Yeah, okay. That's good. And my next question is, so that's 1/3. What about those other 2? So you're saying we should be looking at a 200%.
Right.
So what should be our second and third?
So I say 100. The next one I say wait till it gets to 175, 200. Okay, 175, 200. I would prefer 200, but somewhere around there. You got to let these things run. The only way to win at options is by, in this type of game that we're playing, more of like a swing trading mentality where you're playing over months, not day trading. Day trading by itself has its own complications. It's very difficult to do. But in this game, you're building a portfolio of 6, 7, I call it racehorses, and you want to let the winning racehorses win, and you want to see the weak horses, you take them off the track, right? I want to run winners. My boss used to, walk in the room and he'd literally, this was him. Every morning he had his sheets, which is funny because I do the same thing now, but he has his sheets and he's going like this and he's looking and he goes, Felix, XYZ. Yeah. He goes, get it off my sheets. Like he couldn't even look at it. He was disgusted by XYZ. He's disgusted. It was like, I don't want to touch it. Tomorrow when I have my sheets, it better not be on my sheets. Okay, boss, I got you. We'll take that off, work it off. And now I'm making calls to try to get out of position. So, it's about, these things are all about psychology. It's all about, figuring out what works for the individual. But 100, I'd like to see 200. And then I'd love to see 500. Let that last one run. That's the winning horse, right? If it hits 200, if you look at the results, you see things that hit 200 can actually go. It's like that magical springboard that it's free to go. This thing is gone. Because not only that, but when you're allowing something to run, the deltas, this is getting into the Greeks, the deltas, or how this position is working, it starts working closer to what the stock is doing. So if the stock goes up $2, the option is going up $2. Well, you only paid $1. That one day move, although it's 2% on the stock, that's 200% on your original trade. And so you start seeing the compounding and the leverage work. But you got to get there. It's got to cross the strike. It's got to be in, and then it's got to go. People might be CGC. Oh, it's up, and listen, it's just getting going. CGC. If it's true that we're in this new phase of marijuana cannabis stocks, and we're catching that move, it's still early in the marijuana game. I don't want you blowing the gasket and going, it's up 60% and I want to get out. It's like, give it some time. You bought an April option, and so you want to give it some time. You want to be patient. It's there. It's not going anywhere right now. You just got good news. We want the Democrats to keep talking. We want Kamala Harris, Vice President Harris, to keep pushing her agenda with the Safe or More Act or whatever it is, where imagine they pass a law where they say it's okay to hold. Hey, everyone, it's okay to hold marijuana stocks in your portfolios in the United States. BlackRock wants to put in, I don't know how many billions into marijuana stocks, cannabis stocks. Green light, these stocks are on fire. They're gone. You're not going to be able to catch CGC or Tilray or a FOB, whatever the thing, Alpha, whatever. These things are gone because the big boys are going to say, okay, we're in. We got to get in now. So let's get in somehow and let's figure this out. Is that fair?
That's very fair.
Okay. So that's what we're trying to hit, the 200 mark, 250 mark. Remember, sometimes it goes up 100% and it opens up at 120, 130%. Sell one, just do something, act somewhere. You want it to go higher. And if it does go higher, you got to switch your mind from thinking, damn, I sold it and it's going higher. You want it to go higher. You should be excited when it goes higher. Why? Because you have two left. And now you're already getting into the 200 range. Boom, you sell the second one. Now you're averaging at $1.25, $2.25. You're averaging around 160, 175. The third one, you get it above 250, 300, 400. Now you're starting to get above 200, 250 for an average. Sometimes we're lucky and we get a gap, and it's an immediate gap at 200, and it's like, okay, great. Just get out of one there and follow it and have a trailing stop. So these are all part of the plan. Everyone is unique and different. Everyone looks at it in a different way. Everyone has different strategies as far as how to play it. Again, my role is always to find the hot spots and to find the ones that I think have the best opportunity. And I think there's something valuable there that someone is looking at just from experience of seeing these guys trade and how they trade and the names they're trading. And, they don't go after these 200 vol names often. It's not like they're excited about 200 vol. They try to find, the names that are just getting going that people aren't looking at. I'll give you one, eBay. eBay's a name. We're long, people not looking at eBay, right? eBay's been a company that has withstood time here. And it has a market cap that's doable for these hedge funds to take a bite into and try to create change there. It had some problem with trust, customers and sellers, and they're making some big changes there. And what will it need to get people excited about eBay? What will it need? It will need a good Christmas, a good selling season in the holidays. Get a good selling season in the holidays, and bam, you got yourself a name that's going to start catching fire again. It's like eBay's back, right? And how many customers and people can then tell the story of eBay? But they got to execute. On top of that, you have Elliott Management, who's long the stock, who's been vocal about turning this thing around. And if they're right, and Elliott Management, Paul Singer, some of the smartest guys in the business in that firm, at Bank of America, I used to cover Elliott Management. So I know they're smart guys, the way they think, smart people. They think about risk reward. To them, eBay is a gem if they can get it right. But they're doing good things there, right? Why wouldn't the holidays have been good? They're hitting on all cylinders on baseball cards, because a lot of people have baseball cards in the closet. They're hitting they're hitting the sneakers, right? That's interesting. They're hitting the sneaker market, and they're trying to take a couple of private equity firms or $1 billion valuations. We can do that. eBay could do that, and they're pushing that. So they're doing the right things to attract new crowds, new people. There's also, they're not competing. You mentioned to me the other day, they're not competing against Amazon anymore. Right. And the CEO, they're adamant about this $500 billion opportunity of what's in people's closets. So they say in everyone's closet across the world, there's $4,000 on average of goods that you can sell on eBay. $4,000 is much better than the $2,000 you get from the government. So, people start putting, stuff on eBay. That's what they're trying to remind people. You have a lot of junk in your basement, in your closet, but that junk is valuable to some other person. That junk is sitting there with no value, but you have a grill that you got for Christmas that you never used. That grill is still worth, it may not be worth the 200 because it's the new and best grill, but somebody will buy that grill for $40. So that's eBay. If they can turn that story around and build the trust because they lost a lot of trust, then a stock like eBay could catch fire, right? It's not right now, but what does it need? It needs a good earnings report. It needs a good CEO chanting the story and saying, we're back. And you'll start seeing buyers start popping in there. And when buyers start popping into the stock, that's what drives it. So that's something that we're long eBay. We like it. And it has good risk reward for that reason. I can name a few more if you want, because I see that it's the same names on here. We talked about Uber yesterday. Stocks up big. Again, this is good story. Good story. And look, they're doing driverless autonomous driving here as well. And I think that's the next big trend. Frankly, autonomous driving. I think there's no. If you want to invest in autonomous driving, okay, you got Tesla, maybe Apple, and you have Uber, but pure player autonomous driving, there's not many. It takes a lot of money to develop this thing. There's not many people that have it. So this is, I believe, could be a very, very big trend going into 2022. So somehow from today until 2022, the ability to do autonomous driving is increasing rapidly. And, we're going to see someone come out and say, we have pure plays, or we have this, or this is the way to invest in autonomous driving. And you're going to see that be valued at 50 billion, 60 billion, because that's what other things, again, momentum has to still be going. The market still has to be on top, but I'm looking for little pockets like that. What else are we looking at? We're long Pinterest. I love this name. You're not going to stop me from ever loving this name. This name, okay. I mean, I've said it to you before, and I'd say it again. This name is, we're going to call it. I find it incredible that it's still available, right? I don't understand how Apple doesn't take this name. First of all, they built their business around, call it women, older women. Well, not older women. Let's call it 30 to 65, and they spend money. They spend money. But now Pinterest is attracting the millennials, Gen X. They're attracting men, and it's also a positive, feel-good story, right? It's about passion. Pinterest is about passion. People spend money with passion, right? So Pinterest has developed this platform. They're attracting millions of people now. It's not just women, and it's everyone. They have even corporations that are trying to build their little store within Pinterest. And you start thinking about it, it's like, this is the virtual mall. This is the mall that everybody goes to, the outlet malls and whatnot. It's once the corporations, the companies have their pictures in their sort of catalog, best of in this area, you have a mall, virtual mall, and then you have a virtual mall that has filled with people who are passionate about what they're looking at and what they're doing. Again, they're just starting on the advertising. People are worried that it trades 30 times, 29 times sales. Who cares? Who cares? At the end of the day, when they want to monetize, they will. Okay. The question is, once they start, and now they started, now they actually have to execute. I can't believe that they didn't do extremely well during Christmas. I think if they show another quarter like they did the last time, the CEO is pricing in 60% growth. If they beat that and they show good numbers, this stock is going to trade big. Again, the market's got to hold, but this stock should trade hard. They make it difficult. I'm going to show you right now. You looking at my screen here?
Yes. Okay.
They make it difficult to buy the event. Look at the vol. You see, you're going to notice 50, 50, 50, 86. Okay, it's basically saying we'll let you buy the January calls. So you want to buy January 75 calls or 72 calls in Pinterest, right? Okay, 3.5. You want to buy 1 week later for the earnings, 72 calls or 72.5 calls, 72 calls, 6.5. Okay, almost double. And we're just talking about 1 week. So they make you pay for it. But this is something that. This is a name that has enormous leverage. And frankly, I don't understand how Apple doesn't buy them. It doesn't. It absolutely doesn't make sense. Back in 2016, Microsoft bought LinkedIn for like $25 billion or something like that, and that was considered a lot back then. It's like, wow, they're buying LinkedIn for $26 billion, and it's been a home run for Microsoft. Okay, Pinterest is 45, 50 billion dollars. I mean, how much is Apple up today? Okay, Apple is up 3%. 3% on $2.5 trillion is how much? $75 billion. Okay. $75 billion. Okay. In one day, they just increased their value. Pinterest is under 50 billion for the whole company. So if I'm sitting in Apple, it's like an afterthought. It's like, Pinterest would be awesome for Apple. It's the same vibe, same type of people. You use your Apple phone. Apple loves data. They just want data, and they're not in this. It would be great for ads, an ad vehicle. I mean, you have millions of people trying to buy things through what would be yours, Pinterest. And the people that are on Pinterest it's all feel good type of stories. Again, it's passion, it's positive, and it's not like Twitter, it's not like Facebook. I just can't understand how Apple maybe they're waiting, but what is it? What would it cost? Let's have a conversation. What do you want? 100 billion? 120. Fine, done. Sign the papers, go. Well, maybe a little more. What do you want? 130, 140? It doesn't matter. What does it matter? 2.5 trillion. Apple just gives them some shares. It doesn't matter. Apple's going to make 500 billion just on their cash, in the next quarter. It doesn't matter. But you know what does matter? You can't build Pinterest, right? Facebook tried. Facebook came out and tried. They put out Hobby, and guess what happened? Did you ever hear Hobby?
No.
No, exactly. Nobody did because Hobby went nowhere after 5 months. I think they closed it down. They said, okay, we stink, close this down, make pretend it never happened. Well, we're not talking about just some random Silicon Valley startup started, Hobby, and we're trying to get people and trying to get up. It wasn't that. It was Facebook, one of the most powerful companies in the world, says we're going to beat Pinterest and we're going to start. And within 5 months, they said there's no chance. There's no chance of beating them. That's something telling. That's saying to you that what I've been trying to say about all of these, that these are strategic assets. They're a piece on the chessboard. And when these companies that have $2 trillion, it's an afterthought to just say, what does it cost? 20 billion, 30 billion. So just like TikTok, nobody heard of TikTok, or it started picking up in the United States. All of a sudden it was like, somebody's going to buy TikTok, and it was like Microsoft. And then out of nowhere, Walmart was going to buy TikTok, and Oracle. It was like nobody even thought Walmart would actually think about doing that. And there they were. There's a lot of people that are thinking, man, I would love to have Pinterest. Imagine if I had Pinterest. How about Target? You're going to tell me Target that's not the crowd that Target is trying to get? I mean, it might be a little bit expensive now for Target, but it wasn't a year and a half ago. And for right now, Apple, it's not. So I don't understand how these things, how Pinterest is still by itself. I really don't. But you will see that someone makes a move on Pinterest. I bet you there's 6 people lined up saying, I want in the race. I want to see, what are we paying? Can we do it? There'll be a bidding war on Pinterest. It's to me, it makes logical sense. Even Amazon, right? Logical sense. They bought Whole Foods for what? They're getting into the grocery business, okay, but also for eyeballs, for data. Wealthy people go buy, generally the upper class go buy Whole Foods, and they get data on what you're buying, when you're buying, how you're buying, are you using your car to buy. I mean, they're doing so much analysis that they know how to hit you with the next ad for the next thing. Maybe it's clothes. Maybe you're next to, they know that Whole Foods is next to, Gucci, for all I know. And they say, well, let's just kind of get you going into Gucci. And sort of, they know whatever they want you to do, they know. So anyway, that's my rant for the day. Sorry.
Nice. I mean, that was good. I like that.
So yeah, so listen, so this is what we're thinking. This is how we're doing it. Why don't we just, I think it's an hour when we start there. We'll pick it up tomorrow. Obviously a lot going on. The stocks, the market's still going higher. We're in, things that people are buying. They're buying the Riots, the Maras, the Triple Ds, although some taking profits on these, but they're still active. Plug and all the solar energy names are bid. The SK investment was a clue that the world is also watching, and the world realizes that the United States is going to pour billions of dollars in this. So let's all get involved. One name that I think you should watch. We saw it yesterday. It's you know, it's something that I think people should watch is GE. Read up on GE. Go read an earnings transcript. Go see what they're doing. Their investments are in solar, wind, power, all this stuff. So I would have to look at, I know they have a lot of debt and have a lot of problems holding that debt and actually paying off the debt. So there's a big issue there, no doubt. But if money's being poured into these types of companies and their assets rise in value, and they can actually use that as in some of these where they're financing a lot of this stuff, they can use that one as collateral and better collateral to lower payments or just make some payoffs. There's a lot of things that can happen when the business is doing well, when all the business is doing well. So they are a little bit like private equity, merchant banking type of firm. GE, something to look at. Like this could catch legs over 2020, 21. Could be that machine. It's like a bank to some extent, but they also own assets. So something to watch. I haven't gone through it, to be honest. I haven't even read the latest transcript, but I would listen to that CEO. He came in only last year, I believe, and he's a very good, very well-known CEO. He's a person that people like. And if he can turn GE around, this is a big turnaround story. So there's a lot of leverage within GE if they can get it right. I would say that. And then we just saw Barclays upgrade. There was a TPR, Tapestry, and CPR. Again, same thing, call buying there. Barclays just saying, good things that they think after COVID-19 is finished, the vaccine, and we're back to normal, if ever, whatever normal means, that these two will do well. That's all I got.
All right.
All right.
Good. Thank you, Felix.
All right. Thank you, Marco.
Right. And thanks everybody.
Make sure you get people to subscribe.
Yes, people.
I'm losing my breath.
Subscribe. Felix is gonna be mad at me, so I gotta ask. And make sure you comment stuff, and we'll be comment your thoughts, stocks you want us to look at, and in our next episode, we're gonna make sure to read all the comments and address all of your concerns, thoughts, ideas, and everything. Thanks.
Great. Bye. Thanks, guys. Bye.